Inflation is falling, interest rates are rising, and the calendar has turned over to a new year, which means our IBond contribution limits have reset, and we all have to make the decision on whether or not we're going to contribute another $10,000 into IBonds in 2023, or if the economic conditions have changed enough that IBonds are no longer an attractive investment. But before we get into all those issues, let's look at where IBonds currently stand. To start 2023 off, we have IBonds currently yielding 6.89%. That's 6.49% by way of the variable portion of the IBond interest rate and 0.4% as a fixed rate for the life of the IBond. That's still an attractive interest rate, but things like short-term T-bills and even your high-yield savings accounts are now offering interest rates above 4.5%, and they come without the need to lock your money up for a full year and without the penalty of forfeiting 3 months worth of your interest earned if you don't want to sign up for a 5-year commitment. The variable rate that your IBonds pay and what makes up the bulk of the overall interest rate you earn on IBonds is calculated based on the change in the inflation rate over the prior 6 months. And that's kind of where the elephant in the room is right now for IBonds. While at the time I'm recording this, we don't have the full 6 months worth of data that we need to accurately predict what the next variable rate will change to, we do know that inflation has been slowly but steadily decreasing, raising speculation that the IBond interest rate could drop as low as 0 for the May 2023 interest rate change. That doesn't mean inflation is under control, or even that inflation is low by any means, but that variable rate on IBonds is calculated on the month-to-month percent change in inflation over that 6-month period. And the fact that inflation has been slowly decreasing means that that month-over-month trend used to calculate the IBond rate will be very small if that trend continues. As I record this, we have 3 of the 6 months worth of data that we'll need to know what the May 2023 interest rate change is going to be. October of 2022 had a 0.41% increase, November had a 0.1% decrease, and December of 2022 had a decrease of 0.31% for a total change of 0 at the halfway point of the calculation period. So it looks almost guaranteed that the variable rate on our IBonds is going to go down, but how far down will depend on the next 3 months worth of inflation data that comes in. But we only have limited information to work with, so based on that information that we currently have, what should our IBond strategy be for 2023? And I think it's obvious that if you were only attracted to IBonds for the eye-popping interest rates, like when they were 7.12% or 9.62% last year, and you didn't really consider them a long-term holding, then you're probably better off looking at some of those other short-term investments, T-bills or CDs or even high-yield savings accounts for your cash. But if the short-term interest rates were your reason for getting into IBonds to begin with, I'd argue that you made the wrong investment choice in the first place, because IBonds are meant to be a mid to long-term holding. That's why there's that 1-year period where you can't touch your money at all. And that's why there's the 5-year period where you forfeit 3 months worth of interest if you withdraw. Now, if you're looking at IBonds as a long-term holding, as you probably should be, the decision really isn't about whether or not to invest in IBonds in 2023, but when to invest in IBonds in 2023. And it's because of the IBond contribution limits that we have to be strategic about how much we invest in IBonds and when. For 2023, the key factors we have to consider on when to make our IBond purchases are A, the potential change in the IBond variable interest rate, and B, the potential change in the IBond fixed interest rate. And it's that fixed portion of the IBond interest rate that's a bit underrated, if you ask me. People see it as just 0.4% of a bond that's yielding 6.89% and dismiss it as trivial. But for someone that is going to hold IBonds for the longer term, that fixed interest rate could be a huge bonus, because that 0.4% is guaranteed for the life of the IBond, 30 years. That means the possibility of beating the official interest rate by nearly 0.5% for 30 years in a zero-risk investment. In fact, if you're one of the people that missed out on the 9.62% interest rate last year and bought your IBonds at the current 6.89% interest rate with that 0.4% fixed, you'll actually be ahead of the people that bought at the 9.62% rate where 0% was fixed in roughly 4 years. So you'll be ahead of the people that bought at the highest ever IBond interest rates before the early withdrawal penalty even disappears from your IBonds. And that, my friends, is the power of that tiny 0.4% fixed interest rate. So while it looks almost certain that the variable rate is going to fall, what is the fixed interest rate gonna do? The current IBond rate came into effect in October of 2022 and is valid through April of 2023. And the Fed has hiked the Fed funds rate several times since these IBonds were initially issued with the 0.4% fixed interest rate. However, the Treasury doesn't necessarily use the Fed funds interest rate to set the IBonds fixed interest rate. In fact, how they set the fixed interest rate on the IBonds is actually kind of a mystery. Personally, I like to think they have a giant wheel that they spin like on The Price is Right. And until they tell us exactly how they do it, that's what I'm choosing to believe. Obviously, a higher fixed interest rate on our IBonds would be better for all of us in the long term, but there's no guarantee that that's going to happen. So let's look at what our various options for buying IBonds are and how they might play out. If you buy your 2023 IBonds anytime between January and the end of April, you're going to get the same return on your investment, because no matter when in that period you buy, you'll earn the full 6 months of the current 6.89% combined interest rate, which includes that 0.4% fixed portion. Like we said, it seems certain that the variable portion of the IBond rate is going to decrease come May, but will the fixed portion rise? That remains to be seen. So what about waiting till later in the year for the November interest rate adjustment? I think that's a really risky bet, because if inflation and the economy totally change course over the next 8 or 9 months, you risk possibly losing out on the fixed interest rate altogether. I don't know how likely that is, since the Fed has stated they're going to keep interest rates around 5% for at least a year. But you never know what's going to happen to make them change course. And you have to be willing to decide if that's a gamble you're willing to take if you choose to wait that late in the year. And while I just said that that's risky, I think the best thing for all IBond investors to do right now is to wait. I wouldn't do anything until April, because when April rolls around, we'll have enough data to know where the variable rate on IBonds is going to change in May, and might even have a better outlook on what might happen with the fixed interest rate at that point in time. And even then, I think the best course of action for IBonds in 2023 is going to be to spread your purchases out throughout the year instead of maxing out your limit in one fell swoop. I highly doubt that the fixed portion of the rate will disappear in May, so if you buy a portion of your yearly IBond allotment anytime between now and the end of April, you can guarantee yourself that fixed rate and also guarantee yourself 6 months of the higher 6.49% variable rate. And then if that fixed rate does happen to rise for the May to October period, you can jump on some more IBonds then and lock in that higher fixed interest rate. Or even wait till towards the end of that period and see what the interest rate forecasts look like later in the year before deciding to complete your IBond purchases, possibly between October and December, during the last adjustment period we'll see in 2023. Leave me a comment and let me know what your IBond plans are for this year, and be sure to check out this video next on more strategies to maximize what you can get out of your IBonds. Thanks for watching, and I'll see you next time.